Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good Saturday morning. Welcome to another edition of Florida Talk Real Estate. 2 hours of infotainment is what we offer you. Thanks for taking a little slice. Get it all over your face on a Saturday. Whether you're on the radio, 92.1, 101.7, thank you very much. Maybe on your free download, your iHeartRadio app. Excellent to have you with us. And we are, I believe, live streaming. 2 sources you can join us on a live stream on a Saturday. On Facebook, Florida Talk Real Estate, you'll find us live streaming. And on YouTube as well, Florida Talk Real Estate, LLC. Ton of informational chunk videos to be found there. And of course, a live stream on a Saturday for 2 hours of infotainment. And you can be a part of the show. Toll free at 877-927-6969. You got a question, comment, concern in the world of real estate, want to jump into the conversation, dial it up. The first voice you'll hear, that's our melodious tones of our producer extraordinaire, Jimmy, my brother from another mother.
Hello. Good morning, Johnny. How you doing today, bud?
Good, buddy. Nice to see you as always.
Not bad.
Pleasure to have the crew back together. Speaking of the crew, I am your boy, Johnny C., your old buddy, your old pal, your air traffic control. Here's your starting lineup. Always a pleasure to say good morning to the mortgage guy from the mortgage firm. My friend, your friend. There's Mike Rauch.
Yes, sir. In the house.
What's up, dude?
Boys are back in town.
Yeah.
Feels like that a little bit, right?
Oh, yeah.
I mean, we were out last week. You guys were in. The week before that was a little odd. I got here late, remember?
Right.
No phone.
Right. It was a weird Saturday for you.
Yeah. I guess this time of year always gets a little crazy.
Things work out okay with the car?
Yeah, I got it fixed in the parking lot.
Good.
Yeah.
Excellent.
It's always nice to be able to do that.
That's what she said.
Wait, what?
Oh, wow.
What did she say?
She got it fixed in the parking lot.
Did you back in?
Oh.
What?
Wow. After it was fixed.
Oh, okay.
Yeah. And of course, man, are we closing in on 12 years? We're closing in on 12 years, aren't we?
Yeah, we're 5 weeks away.
Okay, because I know over 11 years, and I'm like about to say 12 years soon. But damn near 12 years I've welcomed our fearless leader. And, he runs not only this show every Saturday, but a top producer in Keller Williams' team. Keller Williams Innovations, you find the Florida Home Pros team. And my guy, Jimmy D. Jim DePola, how you be?
Thank you, Johnny. Thank you. Good morning, Mike. Good morning, Jimmy.
Good morning.
Good
Morning, Jim.
Happy South Florida, everybody. We got a lot of stuff to talk about. Not all doom and gloom.
Oh,
Thank God. I think we got through some of that. Interest rates have relaxed. We're going to talk about that, Mike.
Yeah.
That's kind of nice. But there's something that I read in yesterday's newspaper or news. I don't get newspapers anymore. Those are going to be, that's going to be the term. I wonder if newspapers is going to like die out as a term, or if it'll turn into, they call it newspaper, but it really isn't newspaper anymore. Do you know what I mean?
Yeah.
Or is the
Yeah, it's
paper,
like-
or is the,
Yeah.
or
Like taping something.
yeah,
Right?
yeah,
So we
exactly.
let's go tape a commercial.
Yeah,
Well, we haven't used tape in 20 years.
exactly. So I wonder if we're going to keep newspaper. That's going to die too. Even the name is going to die.
I can't remember the last time I said newspaper.
Yeah,
Except for
exactly.
right
Right.
now. Right?
Yeah.
seriously.
Yeah.
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 I think we go just 10 years. I don't think newspaper. Say that
Yeah.
again.
You know,
What'd you just say?
I remember since television, like the news has taken over. What's that been, like 70 years now? Like you watch the news.
Yep.
So the
Yep.
news. But
the other thing I learned a couple days ago was that more people get their news from the evening news, ABC, NBC, CBS, like regular half-hour show at 6:30 or whatever. Most of the people get their news from there. As far compared to the cable networks,
wow.
just cable, right? I was very surprised about that.
I figured online sources would dominate that.
Yeah,
As
that's
large
what I was
media.
saying too. Yeah.
Well,
Yeah.
maybe they're classifying like what is actually news, because Jimmy and I were talking about it as it relates to interest rates. I read 2 articles yesterday. One of them said the Fed was going to do this. The other one said the Fed
Of
the
course.
exact opposite. I'm
Exactly.
like, okay, so this isn't news at all.
At all, we're both opinion based.
Yeah,
Like, I think this is going to happen. and
Well,
I think this is gonna happen.
just to be
Media.
just to be fair, as a former journalist, okay, it could be that the article was about what's going to happen to the interest rates in the future or what's happening, and they talked to a bunch of people, and it just so happens that those people said, and all they're doing is reporting what
True.
these people
What
are
people
saying
said.
is going
True,
to
sure.
happen.
Yeah.
True.
So it isn't like the newspaper is like doing it, but if you don't get a nice
Balanced.
balanced views, that's where you really get screwed up. And that's where I feel like national news has just fallen off the earth. There's no place to go. And I like independent news, right? I like Walter Cronkite news. That's what I like. Just the facts sir and ma'am, or they or we or whatever. I don't care, right? Just give me the facts, and then let me make decisions based on that. If I want to know more, I'll go out and research it. I don't want to hear your opinion about it, right? I don't want to hear some talking heads opinion about it, right? That's making $5 million a year talking about how they understand blue collar workers.
Right. And when you want to hear that, then you know there's the sources. You're like, well,
Yeah, and when you want
when
you want your you cannot believe how much I watch news constantly on my phone. And when I'm in restaurants and I pull up certain news organizations, you can actually see people turn their head and like look. It's like, and it's funny because I watch all of it, right? So I'm on all the different ones, right? So like CNN, for example, it actually has a song that comes up, a little chime that comes up when you turn on the app. And then people turn around and some people will give you like this look like, oh, CNN, right? Or I've had it where the waitresses or servers have seen me on Fox, reading Fox stuff and have an attitude about that.
And like make an opinion of you based on.
And I'm like, I try to read everything because I want to know. I want to know what's going on. I want to know how other people think too, not just what I think.
Well, that'll give you an opportunity to get into a really in-depth political conversation with your waiter or waitress.
Exactly, right? Which is exactly what everybody wants. I don't know how we got off all of that. That was my thing. But
the various read and consume in your newspaper.
I actually have this idea. I just haven't gotten to it. I've got over 3,000 articles sitting in a storage center. Right, from all the articles I wrote, and that doesn't even include the ones I wrote in college. Right?
Yeah. You think they're there?
No, I know they're there because I go there every 3 months to check on them. Right. But I have hard copies of all those articles and everything. I really want to, whenever I get the time, I want to do like a podcast of me talking about the old stories. We'd be talking like 1985, 87, all the way to 2005.
Nice.
And like just talk about, what it was like being a crime reporter, back 30 years ago. I thought that would be kind of cool. The only thing I'm trying to figure out is I don't really want to use, the time is important. But the other thing would be, just worried about I have to talk to somebody about legal liability because what happens to some of those people from 30 years ago were never convicted or whatever, right? And so I have to figure out that legal thing because I don't want to screw. I'm not trying to hurt anybody or anything. I just want to talk about what it was like living in Florida. What crime was like back then compared to today and stuff like that. That would be kind of interesting.
Especially those crime.
Yeah. Crime podcasts are so popular right now. It's like crazy. Yeah. So. We have a lot to get into today. We have the interest rates. The feds are supposedly, I only read one article on this, the feds are supposedly investigating Florida right now for the homeowners for Citizens Insurance, saying they're very worried that if the big one hits, we don't have the money.
The Senate's looking to do it.
Yeah, but apparently they have investigators under the Senate that are actually, but that's why it's a Fed investigation. I don't think it's a DOJ thing. But they just want to make sure. Now, they're not saying anything is bad. They're just worried. They're worried, right?
That the federal government will have to come and save the day.
That's exactly it. The feds are like, hey, we're going to have to bail the state out if something goes bad. And we want to make sure that you guys are doing the right thing. So they're coming in, right? Now, I was thinking about this today when I was driving down here. I was thinking, you know what? I don't think that that's necessarily a bad thing to make sure that the states are doing what they're supposed to be doing, but it's also state rule. But then you get into the whole politic thing of like who's at the White House and who's in control of the Senate right now, and are they just picking up? Are they just picking on DeSantis?
Well, but if you view it that way, you're really viewing it from a
wrong perspective, right?
DeSantis himself come out and says everybody knows Citizens is not solvent.
I didn't know that.
It's not solvent. It's not solvent.
I didn't.
Like, what?
I never heard him say that. I'm not saying he didn't. I just haven't ever caught that.
Oh, sure. I think probably an article you read too. Yeah, his quotes.
I didn't finish that whole article yet. Okay, that's right. Okay, there it is. Okay. Okay, so he was kind of saying, "Hey, we're in trouble."
It's not like an attack on a Republican-led state. It's a reality,
right?
And there's also the reality. They want to make sure that because citizens can, we've discussed it, they can enact, you can raise auto insurance, like
Every insurance.
Every insurance in
insurance.
Florida can get raised to supplement citizens.
Yeah.
Mhm.
And that the Senate's like, I don't know. I don't know if we like this. We got to see what's going on here. So it's not a bad thing to pull the curtain back a little bit and be like, what exactly is the plan here?
I don't
Because
know.
if a big storm hits,
I
It's
don't
bad
know
shape.
how they're going to solve this problem, right? I rarely talk about politics, and I rarely use names, right? So I've used a couple names today and everything, and what you believe is what you believe, and what I believe is what I believe, and that's okay, right? That's what American politics is about. So I don't like talking about it unless it's affecting citizens, like it affects us on a immediate, very clear basis where you don't have any bias involved.
well, it's weird when you mention insurance that it's even considered politics.
Right. Well, that I agree with that part. But
Right.
here's the thing, though. Here's what I think is very interesting is that this show, how many years have we been saying that if things don't get better, Florida insurance is going to be in a crisis, right? That we're going to be in a crisis situation. We already seen it squeezing people to unaffordable levels where they can't buy the house that they want because of insurance might be the
Already.
final straw, right?
Mhm.
And now we're worried that if something comes, we're not going to be able to cover our bills. That's a scary, scary thing. That would be such a huge collapse to Florida if something like that happened. So we have to do everything we can as citizens, and everybody work together on this because it doesn't matter what political affiliation you're in once the hurricane hits.
I have a question.
Mhm.
We're talking as if Citizens is only in Florida. Am I?
They are.
Is that true?
Yeah.
Yeah.
They're only okay.
It's
That's
a-
only a Florida.
It's a
State-run.
state-created,
Yeah,
state-run
state-run.
program as a safety net, basically. So
And now it's the leader.
And now it's-
right. Yeah.
Well,
and we've
I
been
didn't know.
in,
I didn't realize it was just Florida.
Well,
my
I think down here in South Florida, like Ross would tell you, like 90% of the policies he's writing are citizens' policies. But I think in the state of Florida, it's not quite as severe.
I just had 2 people that closed on properties in the last 60 days that did not use Citizens, and they weren't new construction homes. Not including Timothy because he was new construction, but 2 not new construction homes that got regular insurance policies.
Non-citizens
Yeah,
policies.
non-citizens
Were they
policies.
interior policies or full
Single
policies?
family homes.
Interesting.
Yeah. Yeah.
What'd they pay?
Well, one of them, the
Yeah.
house was about $850, and they were only paying like $6,000, but they had a roof issue.
Yeah.
So we had to do a crazy machination like we always do to try to solve the problem. So they were buying it with the bad roof, putting the new roof on within a certain time period.
Okay.
So their rate will change later, but they were paying $6,000, but it was a reduced insurance. Then they're going to put the roof on and then do full insurance with everything. But it got them into the house.
Still doesn't
But
sound
that's
That's
what-
terrible.
Comparably.
Yeah, I mean, I don't know what the square feet.
Well, it's
like
30, probably
Yeah.
3,800 square
Close
feet.
to 4,000 square
Yeah.
feet. Yeah.
Yeah, because Ross will always tell you, I don't care how much your house is worth, right?
Right.
Yeah, it's
How much can you cost to
square footage,
rebuild?
Right.
essentially.
Yeah.
Yeah.
So the fact that we have to talk about that we're renegotiating things or doing things because of the insurance policy is unexpectedly high, that's a crisis. We're turning it, but it's going to, it's potential that it could get much worse. And I've always said, how many times have I said throughout all the years, can citizens really cover it? How many times have I asked Ross? Not that Ross would know, I'm not holding responsible, but he's in the industry, so he reads a lot more than I do. And I keep saying to Ross, are they really solvent? He kept saying consistently year after year, yeah, we're solvent. From what he's read, what his industry people are telling him in the industry.
Yeah.
So it'll be really interesting to see what's going to happen, but we got to fix this.
I mean, doesn't citizens have to use reinsurance, right? It's not like
Yeah, that's.
So
Oh, well, no.
you're saying they don't have reinsurance? They have to have
Citizens
in their
is the-
coffers?
No, I think they don't have reinsurance. I'm pretty sure
So
they don't have
What are
it.
they backed by then?
They're
Is it
backed
the
by
state
us.
itself?
Like
Yeah.
crazy.
By us.
as well.
Yeah.
I don't
That's
know.
it's
The thing is, the crisis is on both ends. So if you say one crisis, the insurers are not able to withstand a huge event, right? Where their claims are going to come in. And then the other crisis is insurance is not affordable for homeowners in Florida. I mean, those are at opposite ends of the spectrum. Like,
That's
how
why
do
I
you
think
solve
we're
that?
going to go through a major change.
Well, aren't we?
I think we're going to go
We
through a
should build a
major
storm wall.
economic and demographic change in Florida if this continues this way and they don't have a way to solve it. Because what I think is going to happen is if they let if government steps out of this and let laissez-faire regular economics take over, what's happened is we've been underinflating or undervaluing our insurance, and we haven't been living up to it. And what we've been doing is like, oh, so all these insurance companies are pulling out. We'll just create our own insurance company. That's not a solving of the problem. And if we get a big one, it's going to collapse. So to me, the way that you solve it is you let real insurance values dictate what it costs for insurance, and then let the chips fall their way, and then all the prices will have to reset based on that.
But we have that one variable that we have to wait on. And remember, they're telling the word is that a lot of our crisis is due to the litigation.
Yeah, fraud.
Right? So that dominoes started falling. They tipped that like a year ago as we started changing. Was it not even that long ago, right? 8 months, maybe
I don't
10
even
months.
think it's
Started the
yet.
process.
Yeah.
We have a little bit, probably another year and a half.
I don't think it's going to solve it.
I don't
know.
know. But
If you could start from scratch and you could ask the insurance companies, like, could you make money? Could you be profitable in Florida with just like straight homeowners insurance activity? And they're going to say, yeah, if you guys make it so that I can't get sued or, have to pay, quadruple of what I should be paying for a claim, right? If I could start from scratch and say, ideal world, can I be profitable? Yes. Without all of the fraud, all of the insurance claims, all of the legal fees, yeah, we can be profitable. And that's what it's going to take to properly insure homes in Florida. But of course, how do you untangle this web? Because there are legitimate claims that the insurance companies fight tooth and nail, and there's fraudulent claims that they also fight tooth and nail. So which came first there? I don't know.
Well, let me ask you this though: is that
But that's supposed to put us in a different world.
there's
Right?
some? Well, I've read recently. Now it was only one article.
That's where it becomes
But
political.
I read.
The lobby.
Well, I read. Well, the lobbying is yes. Everybody agrees on that, right?
It's supposed to free it up and then bring the players all back to Florida.
But I've been reading recently, not when we were talking about making the changes with the special legislative sessions and all that, but after that, I read a report in Forbes or something where somebody said they blew the legal stuff out of proportion as to what the insurance companies are really worried about. And that's a big factor. There's no doubt, but there's a lot of other big factors involved. And that even when that's done, it isn't going to be the big panacea, the big fix, right? It'll help without a doubt. So, and that was just one story I read. Most of the stories I read is like what Ross has been saying. What was it? 92% or 78% of all the lawsuits or whatever are down here. We're only 2% of all the lawsuits in the country. We have 78% of the claims are here,
right,
or something like that.
Yeah.
That has to make a difference, but I don't know if that's going to be enough for the long run. And I'm hearing that I haven't seen this yet. I've only read about it, but that in South Florida, condo owners on the beach are leaving because their insurances are getting too high, even for condos, even for contents, and the community itself is having problems now.
And though I would say that's not because of storm risk. I think it's because of the age of the building and the lack of maintenance and care. And so those condo policies, because I've seen this, like imagine you're in a condo, you buy it, you're on a budget, your condo dues all of a sudden they double. This is like the same problem with insurance. Like the condo dues double, not because your individual insurance policy is going crazy, but the master policy.
Exactly.
The policy that it costs the condo to basically insure the building has gone through the roof. Why? Because they're on their 30, 40, 50 year time. They got stuff that they have put off, and they got to get it done. And so how do you pay for it?
The building I'm in right now is a 13, 14 story building on the beach, right? It was built like 47, 48 years ago, right? They have cast iron pipes for the sewage. My unit, there was a leak in the wall, and they had to open up the drywall to get to the cast iron pipes. I was talking to one of the building maintenance people, and they're like, we're telling the condo board that the cast iron pipes are at their useful life, and that this is going to happen in the whole building and
How
every
old
unit.
is the building?
About 50 years old.
Why were they using cast iron? 50 years? That's 1970.
Tell you. So
What? It's crazy.
So yeah, so they're saying
Right.
it's at the life of what cast iron is supposed to live, for this type of thing, and they got to rip it all out
and put in copper
and they don't know,
or put in PEX or something.
no, because it's the big 4-inch.
Oh, it's the PVC.
Yeah, the
Some
PVC.
level of PVC.
But who knows how much that's going to cost the building, and that isn't even for hurricane stuff. That's just regular building maintenance that needs to be done, right? So I think that we're going to just see, I think we're in the midst right now since COVID. We're going to look back and say, hey, those, 7 to 10 years after COVID, what happened is Florida went through a big migration, immigration, emigration, both coming in and coming out, and everybody jockeying for new positions. I just had a call yesterday, speaking of.
You want to take the call?
I didn't know. That'd be great. I'm sorry.
You said no doom and gloom, but that's all we're talking
Yeah.
about.
Oh, I'm sorry. Yeah. We're going to get to happy interest rate stuff. Yeah.
877-927-6969. Of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. But who's comfortable to be on the radio, Jim?
His name is Pat, and he wanted to talk about the insurance.
Oh, great.
Pat, welcome to Florida Talk Real Estate.
Good morning, gentlemen.
Hey, good morning, Pat. Are you in the industry? You're just a listener.
Long-time listener.
Okay, awesome, man. Thank you. Oh, thank you, Pat. Oh, I know who this is. Hey, Pat. Good morning.
Good morning.
Hey, what were your comments?
So my thoughts were if we remember what got us into the citizen thing was profitable, successful insurance companies choosing willingly to stop covering homes in Florida and taking those profits from Florida homeowners and running to other states that were less risky. And there's a bothersome where that's not a crime, but not having enough funds and allowing an insurance company to go bankrupt, citizens or private, is a common occurrence. And we didn't do anything, and there's no laws that say that those people that took Florida money for insurance and ran with the profits before they had any claims against them are okay. And there's problems there in the insurance industry where, like you said, it's causing these. I think that there should be a way that if you're insured a condo for 40 years, you can't on the 41st year go, well, it's old and we don't want to cover you anymore. We're going to take all the profits that you've given us forever and we're going to run. Now you got to go to somebody else.
This is I understand where you're coming from on that, and it's a really good insight. And it just shows how complicated all this is.
Yeah.
It just shows you how super complicated. To be honest with you, Pat, the first thing I was thinking when you mentioned about them insuring you year after year, and then at one point they just say, hey, we're not going to do it anymore, we're out of the state. They did have the risk for each year that they took the insurance policy. So if something happened that year, they were supposed to step up and take care of it. So does that mean once they come into the state, they would be trapped forever to stay in the state? Do you know what I mean? Don't they have the ability to make a decision? This isn't profitable. This is more profitable over here, so I'm going to go over there. As a business, I'm talking about not for the citizens,
right.
Not for us, the homeowners. But so it just gets super complicated because there are private businesses that should be able to make decisions on what they want to do with their company.
I think that type of thought about the insurance company is what has led up to people like part of the fraud problem report. Like, well, it's the insurance companies; they don't care about us, so we don't care about them. Just go after as much as you can. I remember my grandparents lived in Albuquerque for many years. Probably paid insurance on their home for 35 years. Right, never had a claim. The minute they had a claim, somebody broke in, or I forget what it was. The company dropped them. Right, they paid their claim, they did everything, but then they're like, okay, now you're too risky for us.
Yeah.
Now you have to go get someone else. So that's like the age-old story with insurance. They're maximizing profit, deny, make as much money as possible. Which is why people hate insurance companies.
And you know what I don't get is most of the time, I'm kind of joking here, but you figure that after the person got robbed, that they're a better risk.
right?
Because the chances of getting robbed again, right? Or if there's a fire in the house, what is the chance of another fire happening again?
Everybody goes, all the good stuff's gone already.
But these companies, they got to be counted. I don't know how you would ever force a private company to say you must. Like, I can say you have to honor the policies you have in place, but you have to write new policies, or you have to continue to operate in Florida. It seems like, how can you do that? I don't know.
Well, they do that to a certain extent already with the insurance board. They do say if you're in Florida, you have to do certain. Yeah, and they do have those kind of rules in there. So maybe Pat's idea about some of the deficiencies he's seeing, maybe that can be included as part of, hey, if you're coming into the state to operate, this is what we expect of you, and these are your obligations to have the ability to do your business in our state.
Unless you go bankrupt, and then
Yeah.
Which a lot of them had to pull out.
Yeah, and the thing is, what popped in my head when Pat was talking about the bankruptcy part was, is Pat still on the line?
Yes.
Oh, I thought he had gotten off the line. I didn't see it. I was looking for a blinking light. So, Pat, what I was thinking is when you said that they went bankrupt, that's kind of fraud, right? I mean, they're covering people, and they're saying they got the money.
Yeah.
And then when the thing hits, they don't got the money. That, to me, is fraud. Right. Yeah. So, maybe that's fraudulent activity, because what I think Pat's saying is those guys are professionals. They had to know that they were taking a huge risk if they didn't have the money. Right. Is that what you're kind of saying, Pat?
Yeah. And possibly a law in place like a term life insurance policy. If they willingly choose to stop coverage, they have to give you back 50% of what you paid in. If an insurance company willingly chose to stop covering you, and then that would force them, like, do we really want to give them back half their money? And then they would stay. But right now, there's no repercussions for them to go, yes, we scored, we hit the jackpot, let's run.
Yeah, and if you think about it, now you mentioned about the bankruptcy part. We lost 8 insurance companies this year? Not that they pulled out, they went bankrupt. So that was a lot of insurance companies that were insuring and didn't have the money they needed to do it. So that's an oversight issue to me also, right? Because the insurance board is supposed to supposed to make sure that doesn't happen.
Yeah, right. Now you start getting into the political.
Right. So, but and that part is not red or blue or whatever. That's been going on. And here is a little bright lining on this, okay, guys. I want to leave a little bright spot on this insurance thing. Is that we went through this about 10 years ago or so, and insurance got up. We've talked about the stats. About 10, 12 years ago, we got up to over 1 million policies on Citizens, and I think it was like 1.2 or something at one point. And that what they did was they really focused at that time to try to get that reduced, and we got down, I think, 400,000 or 500,000. I think they halved it.
Now we're back up.
Now we're at like 1.8 or something, right? Now we're way super high, but we've done it, is what I'm saying. And we've got the people off Citizens into regular.
It was always the insurer of last resort. It was always for the coastal areas. Like, it was just for the ones that are impossible to insure. And now it's.
I just think
an option.
I just
they have a market share of 18% right now.
Who has Citizen 18%? 1 out of 5 almost. Yeah. That's I don't see how the state of Florida would be able to cover if it hit a major metropolitan area.
It would.
Yeah, we're just gonna throw up our hands. So actually, I'm kind of glad for the federal oversight, only to see if anything's like really screwy, that we kind of. Hopefully, because we're at the end of hurricane season. Hey, that's another thing. Made it through the hurricane season this year. I know. Can you believe it? I was really kind of nervous this year. You notice I didn't bring it up at all.
I didn't put
because I used the Johnny theory.
Yeah, I didn't put any mojo out this year. I was like, I'm just gonna leave it alone. I'm not gonna lean to either side. I'm just gonna put it out there and let it be what it is.
Although we did have some storms come through that weren't.
Yeah, we did. But we did. Yeah, we did.
And you had a car.
Well, I want to. Pat's been patient on the phone still. I want to ask Pat a question because I haven't talked to you a little bit. Pat, you were building that gigantic pool area in your backyard and everything. How's everything looking? The upgrades on your house?
It's been complete, and I've been able to enjoy the the 1,500 square foot car shop and the pool, and for 2 or 3 years now.
I know it's been a couple years. That's so cool. I'm so happy for you. Pretty happy in that neighborhood.
Yes,
That's very
really
cool.
Enjoy the neighborhood.
Awesome.
The golf cart parade for the holidays. It's a great community.
Pat, do you have a lift in your garage?
Yeah, Mike's salivating when you said 1,500 square
I know
feet.
what Pat does for a living.
I
He's still
know.
doing it.
Yeah,
It's
yeah.
a cool thing. But do you actually have a lift in there?
I do.
Oh wow. Yeah.
Really? Oh,
Yeah. You use it.
It always sound like porn, right? Yeah.
I don't.
Need some alone time.
Wait, is it a 4-foot or?
That's good. Pat, thank you for being a part of the show, man. Good to hear everything's going well. Always remember FloridaTalkRealEstate.com has got your back, my friend.
Merry Christmas, Happy Holidays, Happy New Year, Happy everything.
See you guys.
See you,
Okay.
brother.
Take care, Pat.
That's right. FloridaTalkRealEstate.com is your one-stop real estate shop. You can join the program toll-free at 877-927-6969 with a question, comment, concern like Pat did. Of course, if you need the team for anything or just need to talk to Jim, I just gotta hear it out, Jim. Go to FloridaTalkRealEstate.com. Can you still get your little calendar that
Chat with
go on?
Jim. Yep. All you
Yeah.
have to do is go up to Florida Home Pros or Florida Talk Real Estate and click on Chat with Jim and make an appointment.
Beautiful.
Yep, all set up there.
Do that.
On the flip side, I promise it's going to be happier stuff because we're going to be talking about interest rates. When we've been happy about interest rates, so that's kind of cool. We're also going to talk about the market, what's happened up to this point of the year and where we are and what we might be expecting next year because we're now in December and this is where we start talking about what is going to happen next year. So we're going to get into that on the flip side.
All right, perfect. 4-minute reset. We'll get back at it. And now we'll tell you once again, Florida Talk Real Estate is it.com. FloridaTalkRealEstate.com, your one-stop real estate shop. Pros. These are experts in their field. You get them all with one click at FloridaTalkRealEstate.com. You got the hotline. Call it anytime, 24 hours a day, 7 days a week. 888-973-7828. You'll find it at FloridaTalkRealEstate.com. Back in 4 minutes. Florida Talk Real Estate right now. It's Real Radio.
What's a Real Radio podcast? It's Real Radio on demand.
This is gonna be
Find
huge.
your favorite show at
JR, I keep calling him Carl. I got to call him JR. JR is
Here's the latest with weather on Real Radio.
From the Gordon and Partners Weather Center. If you or a loved one been injured through no fault of your own, call 561-333-3333 or go to fortheinjured.com.
no, not The Sopranos, but where he was the mobster, moved to Sweden or Switzerland or something. And
That was a show or a movie?
it was a show. It was like a series on
Yeah.
Showtime or Max or something. And
I never watched
and
it.
he went out there because I think he was either running from the mob or he was on the witness protection
report
program
is
or
sponsored
something. But anyway, he's out in
Don't
Sweden.
disclose 25 days of deals. Get 25% off. Christmas breeze.
Yeah, and that's like the
Disclose
Carl
those
Saxon and
deals.
everything. But you go to Ireland,
Selection and
this
availability
guy's moving
of
yeah, to Ireland.
in Hawaii and store only.
Yeah, and I was laughing with
Hey,
him.
it's your boy Johnny C here, host of Florida Talk Real Estate. They're
Got it,
tops
New
when
York.
it comes to helping people buy and sell houses.
Yeah,
But Florida Talk Real Estate is so
Yeah.
much more than that.
not
For
really
5
dramatic,
years,
but
I've watched
you
these
can feel
guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams
Yeah, he
Realty.
got mad.
Their
Not
team
mad, but he
specializes
had a
in helping people
criticism on
sell their
something
house for
a
top
couple
dollar,
months
and
ago.
buyers get great deals on the purchase of their home. That's what they
I
did
saw
for me and my
Google
family, and I
showing
couldn't be
these, like,
happier
real
that I
estate
hired them
market
for my real
crashes
estate
search,
transaction.
right? Like one of the
Mike
top
Rauch from the
searches
Mortgage
that
Firm is one of our
mentioned on the
favorite
show.
guests on the show, and he is the mortgage
You know,
guy.
even Google,
Whether you're looking for a
one of the top
refi or a
searches
mortgage
you
to
do right
purchase
now
a
is
new
real
home,
estate market
Mike
crash.
Rauch will get you
He
the
sent a
answers you
message
need.
said that's
The
not true.
Mortgage Firm is licensed to
Just
do
the real
loans in
estate
Florida,
market,
Alabama,
not the
Tennessee,
crash
and
part.
Georgia,
That
and they have
was
local offices that cover all of
He
South
thought I
Florida.
was like,
So if you're thinking about a refi or a new mortgage, go to the mortgage
Oh,
guy,
yeah.
Mike
Why-
Rauch, and find
Why
out
would
what he
you
can do for
want a
you.
public
The Mortgage Firm Inc. NMLS 189233, Florida license MLD 7.
yeah, he was making it sound like I
The
was.
law office of
trying to
Paul A.
pump up
Krasker has
the-
been specializing in real estate
You
law
know,
for
that's
nearly
the way to do it on
25
YouTube.
years
If you
and
wanna
has the
get
professional
20,
team
30,
you
50,
need.
80,000
Upside down
views,
with your house,
you
Paul's team can help
always say
conduct
that it's
short sales,
crashing, and then
loan
in the video you
modifications,
say it's
even
not
if you're
crashing.
behind on
If your
payments.
agenda
They
is
also
to
help you
sell
with
homes
foreclosure
now,
defense and bankruptcy.
better sell
They
now.
can even help you get a
Then
student
buy it,
loan
go back.
modification and
Well,
repair your credit to get the score you need. Paul's
Yeah,
full
yeah,
service
I'm not-
team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest
so
privately owned title company in
scatterbrained the
Florida.
last 3
When you
weeks.
need a title company to complete a refi, home purchase,
Yeah,
or
and,
sale,
they're
Trident
all
Title
very
has got you
complicated. I have
covered.
two that
Not
might
only
be
do they offer
subject
competitive
to
pricing,
mortgages.
Trident Title has attorneys on staff to make sure if you have bumps in the
Complicated,
road
not just
declaring title,
absurd,
that you
right.
can get the job
I mean,
done.
when I say
Beware,
complicated, I don't mean
not all
we
title
negotiated
companies in
the roof
Florida
or
have
the
attorneys on staff.
or negotiated
Trident
the
Title does and complies with all the new federal regulations released last year. Ross Camaronet, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance. Haven't checked your homeowner's insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need the same day.
Call Ross today at 561-465-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be a part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because FloridaTalkRealEstate.com has you covered.
Well, we are going to
Florida
transfer
Talk Real
title
Estate.
probably.
Tom.
So,
This is Real Radio
what
92.1
when I
107.
used to do this back in 03, 05, I used to do that. The bank didn't care as long as they were getting their monthly payment. They never accelerated the mortgage. They would not. Well, you transfer the title, so I'm wondering if they get noticed.
If they do, they're going to call it due.
Yeah. So that's
This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
You can do it, 877-927-6969. We are live on a Saturday, and you're welcome to join the program. I see blinking lights over there right now. Some folks wanted to join us. If you dial that number up, Jimothy's going to answer that and get you going. That's our producer extraordinaire. What's up, my dude?
Hello, and good morning, gentlemen.
Good morning. I'm your boy, Johnny C. Mike Rauch is the mortgage guy from the mortgage firm. Hello, my friend.
Good morning, sir.
And of course, Jimmy D. Hello, everybody.
Hello.
And of course, Jimmy D is here too. That's Jim DePola. He's a leader of ours, leader at the Keller Williams Innovations. It's the Florida Home Pros team, and he's right over here. Jimmy D, how you be?
I'm doing okay. Thanks, Johnny. I don't like tooting my horn too much, but I'm going to say this because I was kind of surprised about. So in October, based on my closings and everything, there's about 6,000 Keller Williams agents in South Florida. So that's from from the top of Okeechobee, Lake Okeechobee down basically, and maybe a little farther north than that. Anyway, I came in 38th out of the whole group of 6,000.
All right,
agents.
here we go.
So
Toot that horn.
Hey,
I am in the horn. But what I wanted to say is I couldn't have done it without the people from the radio show. You're what makes the show. You're what makes my career, to be honest with you.
You mean us or the audience?
The audience.
Oh,
okay, so you guys make my career too, Mike, because you get the job done for our customers. But you're what makes this team roll, and we just want to thank you so much for the support that you've given us through almost 12 years. We're at what 5 weeks. So 5 weeks minus 52 is 47, right? So 11 years and 47 weeks we've been on, right? Can't believe it. The station said that we were going to be gone in 6. They didn't know me. They don't know that once I'm going someplace, I leave when I want to leave. I'm joking. So
I found that out at the Thanksgiving a couple years back. Jim's ready for leftover turkey sandwiches before he's going.
I remember one Thanksgiving. I tied one on a little too much, and Mike was helping me go upstairs to the master bathroom. Do you remember that? I was in pretty bad shape. Yeah, at the McMansion. McMansion, that was pretty funny.
Occasionally we might have one or too many.
Yeah.
What is that?
What were you drinking?
You know how turkey has
I don't remember.
What ingredient turkey has?
Tryptophan.
Yeah, there you go.
Yeah, it was the tryptophan.
Mix that with hard liquor, wine, and beer.
wasn't a brandy.
No. That's what I was hoping. I was hoping it was a good brandy eggnog. Let's go. Yeah.
It's that time of year, right?
Oh, man.
Get out the old Evan Williams.
Well, we got Evan sitting in the shelf right now.
They sell that year round now.
Oh, yeah.
That's awesome.
You want to take a phone call?
Yeah, so speaking of which, let's go ahead and take the call.
877-927-6969. It was dialed up by who, Jimothy?
William is on the line. He has an insurance question as well. William, welcome to the show.
Thank you.
Hey, William, thanks for calling. What's your question?
A few years back, I noticed that State Farm Insurance, which is nationwide, went to State Farm Florida. And none of the other states, they all stayed the same. I have my ideas on why they did this.
Mm-hmm.
Maybe you could tell me, since you're a professional, why would they limit, which is what they're doing, the insurance coverage by just doing one Florida, and then everything else is the rest of the country?
Well, I wish Ross was here because Ross Cameron is a Brightway Insurance. I'm almost glad that Juno Beach, the only office, you got to call the Juno Beach office. But Ross isn't here. Part of the reason why I'm talking about some of this stuff today is because Ross gets upset. We're talking about, I'm joking. But we're going to talk about more about this next week also. What my instincts are saying, what you're saying, it sounds like we're on the same page here, is they're probably breaking it off so that they can start stripping it out as they want to. And I think they're already doing that. I think Ross has mentioned State Farm has been dropping people because at first, if I'm not mistaken, one of the restrictions where you had to have car insurance and home insurance with them, right, if you were going to do it, if you were going to stay in Florida. So I don't know how long your insurance is going to hold. I hope you have a newer home. Because if the home's 30 years old, I don't know how long State Farm's going to be holding on to you.
Yeah, that might be part of that.
Yeah, exactly.
Years ago,
I'm sorry?
when they did this, I dropped them 4 years ago when they did this, and I've been uninsured on 5 of my 6 pieces of property.
Wow, so that's interesting. Yeah, absolutely. So let me ask you about that. That's very interesting. How much money do you think you saved over the 5 years on the 5 properties?
100 grand.
It's when everything doubled. Oh, I'd say easily $20,000.
20,000. Okay, over the 5 years for all 5 properties?
Yes, I know. In the last 2 years was when they liquidated several companies, and then they came out with this. Well, if you don't do this for us, we're not going to cover you anymore. I just said, good, then you don't get my premium.
Mm-hmm.
And that's 3 pieces of property. That's been the last 2 to 3 years. So just right there would be the easiest. 12,000 on one piece of property over the 2 years, 5,000 on another, and 4,000 on the other. They're small places. They're not big deals, but it's really irritating to have things just double or triple like that.
Yep.
Yeah.
And I'm not getting anything for my money.
Yeah.
And there's another
Protection.
part to this too. Maybe you can answer this one. When I insure a house, and let's say I'm insuring the house for $500,000, that is including the cost of the actual real estate. That doesn't disappear. Let's say the real estate is worth $2,000.
I don't think that I'm not an insurance guy, okay, but just from what I learned from Ross, I don't think that that's necessarily true. They don't count the land; they just count what it would cost to replace the building on the land.
Yeah, you have
that's why Ross.
Dwelling coverage.
Yeah, Ross would. Well, that's different. That's the content. We're talking about the actual replace. Oh, dwelling coverage. Yes.
Dwelling coverage is the coverage to essentially if you had a complete total loss, a fire, a flood come through and wipes out your entire home down to the foundation. Your coverage is always the max coverage. The dwelling coverage is what they calculate to rebuild the home from the ground up, and so the replacement cost.
So Ross's example on the show for many, many years has been this. Let's say that you have a piece of oceanfront property and it's worth $2.5 million, but you got a 900 square foot house on it.
Yeah.
Okay. You're not going to be insuring it for the 2.5. You're going to be insuring it for the dwelling coverage for the 900 square feet.
Right.
Now, if you had that same property and you had a 3,500 square foot home, even if it was I know it still wouldn't be a $2.5 million property, but let's just say that's what it was. It would be the cost of the rebuilding the 3,500 square foot home. That's how it kind of works. So they don't count the land.
Okay. I kind of looked at it as they were insuring the land.
Yeah, I can understand that because I don't trust insurance companies either. Sorry. I mean, I had my own problems with insurance.
You're absolutely right.
Now they do have sinkhole coverage if you're worried about the land. You can get that as an additional
Yeah,
coverage.
that's true. Actually, that's true.
That I can understand.
So I'm just very fascinated by this because this, we're going through this insurance thing for so long now, and you're one of the people, and we've talked to somebody else recently who's decided, you know what, I'm not going to do the insurance thing. I'm just going to roll it. I was going to say something else. I was just going to roll with it and see what happens to self-insure. What would you, are all the properties like pretty close to each other? So like if we did have a big windstorm thing or something happen that they all could be damaged, or they kind of spread out where?
Fortunately, yes, I can lose everything. Everything, again, unfortunately, in St. Lucie County.
Okay, so
I have no problem with St. Lucie County.
Yeah,
I like everything about it.
Right.
But the city of Port St. Lucie, I will never buy a piece of property in it again. I'm sorry, the greed, because that's the other side. It came down to a choice of paying insurance or paying my property taxes.
Highest in the state. St. Lucie County is the highest tax in the state. Yeah.
If I don't pay my property taxes, I'm guaranteed to lose my property.
That's for sure.
Take a chance with nature.
Yeah, that's sure.
That's just how it comes down to. I'm on a fixed income, and after 10 years, I didn't expect it to be this bad.
I know that's
as far as none of them are income property either. That's
you're not cash flowing on those properties. I'm assuming that you were cash flowing on them, or it isn't vacant land, right?
No, it's not vacant land, but I have a large family.
Okay.
They all need. Everyone needs a house, a roof over their head.
Well, God,
it's the grandchildren.
Well, God bless you.
An angel.
Yeah, I was gonna say, God bless you.
You want another grandchild? Yeah, I'll live in St. Lucie.
I don't eat much.
And I'll pay your insurance.
Johnny C, I've listened to you for years, and I'm glad I still get to hear you on Saturday.
Very cool of you to say that, brother.
Yeah,
Thanks for
that was
listening
so
to
awesome.
radio for so long.
If you do have any questions on insurance later on, you can always call us out for air. As you know, it's 888-973-7828 or FloridaTalkRealEstate.com. We'll get you over to Ross Camarines from Brightway Insurance. And thank you so much for calling. I hope you have the best of holidays. And please keep listening.
Yeah, and let's keep the zero. Any Mother Nature rolling in your favor, brother.
Another hurricane season passed, so I'm happy.
Let's go.
Is on the beach.
Oh, yeah.
Well, enjoy the holidays with the grandkids, buddy.
Gentlemen, and I've enjoyed your show for all these years.
Thank you so much.
Thanks, buddy. 877-927-6969. Toll free. The number works. Jimothy will line you up, and you're more than welcome to join the program. Obviously, if you're not comfortable on the radio, remember you have access to the entire team. These are pros, experts in their field. You get them all at FloridaTalkRealEstate.com. You can find us on Facebook and YouTube as well. Live streaming on a Saturday. If you'd like to see these pretty faces. Talking about Mike, Jim, by the way.
Thank you. Thank you.
You're welcome.
Just
trying to get your pants.
He wants that car lift. He wants that car lift. Johnny wants the car lift.
Electric or hydraulic?
Yeah, he did ask us.
It's a hybrid.
What?
I need a money.
So let's talk a little bit about interest rates. Okay, so we have good. What is going on with my computer? This happened to me last week too. Hold on, I'm sorry about this.
Are you not plugged in?
Yeah, you have to plug it in.
I plugged in.
Is it dying on you?
Yeah, it is. It
Battery?
died on me last time, and I think it's my port is screwed up, or the plug thing in the studio is broken, which is what I'm betting on.
The what thing?
The
I
plug
think
thing.
it's
Plug thing.
The plug thing in the studio is busted.
It is.
Is it for real?
You see any lights over there yet? Is there a clock? You know, normally there's a clock.
No clock.
The power's still out there.
You're plugged in. Don't worry.
That's right.
You
For
probably
real?
need to
Yeah,
check
for real.
the.
I'll go get you a cord.
Wait a second. No, I got it.
No, for real. Are you going now?
Yeah.
I think it knows if any of that power works over there.
The wall does. The wall outlet
Oh,
does.
the wall outlet does.
Mine's working.
Okay, I'm hooked up now.
I've got power.
That's what happened the week before last.
You
I
do?
thought it was me.
I have power.
Are you plugged into the wall?
I'm plugged in. There's a strip under my desk.
Really?
Yeah, but this one isn't
Interesting.
working because this is definitely working. Sorry, guys. Sorry about that.
No, this is awesome.
Oh, it's awesome
Jim,
radio.
There should be a little switch.
I need to start telling dirty jokes.
Timothy, I bet you the switch is off. There's a strip just like mine. There's a little red switch.
No, there's no that whole thing there. The audio board. There's
Yeah.
no power to that.
Yeah, but
That's why we got all
off,
this stuff in here.
they don't have the power strip activated.
It's not. Yeah,
It's not that.
Life,
Mike's gonna face it during the
I'm
break.
just gonna go look at it.
Yeah.
Take a look. Maybe.
life of a radio.
I can't do it while
studio.
Jim's over there.
Yeah.
He's an old
We'll do it at the
journalist.
break. We'll do it at the break.
Yeah.
So let's talk.
What are you doing under there?
Let's talk. So let's talk interest rates. Okay. So interest rates started going up basically January of 2022 with hardly any stops in between until we got to. I'm sorry. Hold on. Until we got to about
You sound way
the
better.
end of that year.
Be closer to the mic. You'll sound
I'm
way
sorry,
better.
until we got to the end of the year, we were at the highest interest rate spike in the history of the United States. And then in November, we started slowing down. And then in June, July, roughly, we started picking up again. And we really hadn't slowed down. And we got all the way up to 779, which was back in November of this year. Then for the last 5 weeks, we've been going down, and now we're at 7.22. So I was really getting nervous that we were going to be hitting the 8s on Freddie Mac, because, Mike, if we were on the 8s at Freddie Mac with the Freddie Mac report, how much difference do you think that is in real life?
You mean like sentiment? Or like,
No,
people be
8
in
on
order?
Freddie Mac. Yeah,
sure,
8
of
on
course.
Freddie Mac would be what in real life?
I would say on any of these, you probably have like a half a point swing either direction, which could be your scenario.
Mhm.
So if Freddie right now is saving 7.25, you might be at 7.5, you might be at 7.
I
right?
see.
Okay. Just depending on credit scores,
Mhm.
depending on down payment.
Okay.
Sometimes this is Freddie's conventional survey. So
Yeah,
FHA may be
that's a
different than
20%
VA, may be
down,
different
right.
than USDA.
Mhm.
If you're doing down payment assistance, those rates are going to be slightly different. So
Mhm.
yeah, there's some variation. But
So 722, while it's historically high for the last 5 years, it's not historically high for the last 30. Okay, but we are seeing it go down for 5 weeks in a row. Now we went through this all last year. We go up for 3 weeks, down for 2 weeks, up for 4 weeks, down for 3 weeks. You know, it just seemed like that's what was happening.
yeah.
And we were staying about a half a point in between the high and the low of that high and low I'm talking about.
I feel like just you give me a quick answer. Isn't that kind of the norm though? Isn't there always this little like the roll of the ocean when it comes to the rates?
I would say probably the last 6 years, you've kind of had to be thinking about, I used to be able to comfortably just float a rate. Meaning I don't need to lock today. We'll lock next week, or lock when it's like we're definitely within 30 days or 21 days. And it's just, you weren't expecting any type of movement. And so I would say the last probably 6 years, I would be very conscious to the point where my philosophy is just locking. Like, don't worry about it. It's not going to move enough where it makes a difference. If it does move enough downward, we have some mechanisms to take advantage of that. But I remember when I first started this, I used to like not think like that.
Yeah,
because it just
Right, 'cause it wasn't
as
something-
tumultuous.
Right. It wasn't
Yeah.
something that was in your radar because you didn't really have to deal with it.
Yeah.
So 722 for the last, we're still, I don't want to sugarcoat this too much because 722 is still pretty high
It
compared to the
feels
last
really
couple of years.
great if you've been an active shopper in the last 2 months. So it
And-
feels really good.
Yeah, a half a point drop in interest rates, which is what happened with Freddie Mac over the last 5 weeks. That half a point is 5% purchase power, right? So
Yeah.
now you have 5% more purchase power.
Substantial.
So if you're good at 400 before, now you're good for 420. Everything else being the same, right?
Always.
Or your
so-
payment at 400 is going to be 5% better.
Right, or you're going to have a lower payment if you keep it at the same price.
Not 5% better, but
Yeah, but it'll help. Basically, I because I didn't call you beforehand, the Florida Association of Realtors did a really quick calculation. This median home price in Florida is $388. They did a 20% down, and they did a difference between 6% and 7%, and you're saving about $200 a month on your mortgage if you buy something for $388 with 20% down.
With 1% difference.
1% difference between 6% interest rate or 7%. You're saving about $200 a month on 388. Okay, just to give you an idea of the savings. So the savings are out there. Hey, $200 a month. I'll take that all day long. Right?
Even this half a point would be $100 a month.
Yeah, I would take that all day long. And the hope is that the economists are correct, that you're going to be refining that probably in the next 2 years or so down to a lower rate, hopefully.
Which economist?
We're going to get into that next segment. We're going to get into that. But so these interest rates are easing, and this is what I wanted to mention. How many weeks now, Mike and Johnny, have we talked about on this show? Get prepared, because if the interest rates drop and you're not prepared, and it's like, oh, the interest rates came down, I want to buy now.
Sure.
And you got to go through the application process, and then the interest rates go up. Well, because you got to understand, it isn't just about the interest rates. If you're thinking, oh, the interest rates at the rate I'm comfortable with now, I'm going to go shopping, and you go now and you go through the process of getting the loan, and then or the pre-approval, you got to find the property, and there's no inventory, which we're going to talk about in the fourth segment of the show. And there's no inventory. So it isn't like, oh, I'm going to go out and get a mortgage today, and tomorrow I'm going to go buy a house. Now, there have been cycles that we've worked on this show where that happened. You get the loan, you can go get the house next week, okay? But that's not this market. So if you're waiting and waiting and waiting to get the right property for you, and then the interest rates are so erratic right now, it can go up a half a point and maybe even drop a half a point, but there's a half a point swing. And if you're not prepared when the market's ready for you, you're really making a big mistake. You're making a big mistake on how to handle it. The best way to get the smoothest response, get the house that you want that's closest to you.
I always try to encourage people. Like, I don't mind if someone says I'm waiting. I'm like, this market isn't right for me. I'm going to wait. Fine. What are you waiting for? You need to know what you're waiting for. You have to have a target. And you have to know that when that target is centered, right, you're able to pull the trigger. Right? So you have to know your numbers. You have to know what you qualify for. You have to know if you need any work, whatever. You have to be actively kind of perusing the market. Because usually what you're waiting for, Johnny, that target is a payment. I'll just say, like, that's how it is.
Yeah, your monthly obligation.
You're waiting for a payment.
Yep.
Which means, and I know what neighborhood I want to be in, and I know what kind of house I want, and I know what I need my payments. So what do you got to wait for? Okay, I need housing. I need some combination of housing prices, interest rates to be at this point, right? And then I'll pull the trigger. And so if you have that all lined up, that doesn't mean you're out looking at homes every weekend, but you're looking at homes on your couch, right?
Sure.
You got an email with homes that meet your criteria that are hitting. You've got access to a very accurate mortgage calculator that's going to tell you if you're at that payment or not, right? You know, you can play with numbers. Like, you do all this very, it's I don't want to say it's not passive, it's also not active, it's somewhere in between it, right? Like, you're there, you're poised. And so what happens when in 1 week or 2 weeks, whatever, it goes down half a percent, right? There's other people who are waiting, who are kind of in that zone, who are poised, and they're ready, and they're going to hit, because if rates go down, inventory is already tight. Rates go down, buyers coming, right? Buyers are
already happening.
All of a sudden, if you're like a week or 2 weeks behind, you missed the window because those housing prices are going to bump up a little bit, because now there's more buyers, right? So you have to be ready. Like, that house that you've been looking at, oh my God, the rates just went down 1/4 point this week, half a point of this 2 weeks. That house is still there. They haven't lowered the price. So they haven't bumped up the price. I might be able to get this house, the one that I've had my eye on, at the right number. So if you're a buyer, like if you're an active buyer, like, it makes sense. All the stars align where we should be buying a home right now, and you're waiting for that payment. you got to have the tools so that you can pull the trigger when that target.
You got to be ready. So it doesn't mean that you have to pull the trigger right away, but you got to be locked and loaded and ready to pull the trigger when it's time.
It also doesn't mean you have to go like early. You don't have to push up on your budget. Right? A lot of people do end up pushing up on their budget, but there's going to be some number is just like we can't do this. Right? So we a number that is attainable, achievable, long-term sustainable. And that doesn't mean you have to go up $50. Like some people be like $50, I can't do it. So I'll get
there was a couple early this year when the rates got really, really high where $50 was make or break, right? To get the loan approval. That's why you got to know your numbers and you got to be ready. And the last time, if we want to take a break and we're going to continue with this. But
know your numbers based on what you think your numbers are.
No, know your numbers by know your numbers.
You have to get with the pros that lay out all of the numbers. Insurance comes into play too. Like there's other variables. But as you talk about, Mike's app is one of the more valuable tools that you're going to have. And it's just the facts. You can adjust it in real time to fit it into your needs. So FloridaTalkRealEstate.com is going to be your key for a really smooth, striking opportunity where you get poised, have pros, and be positioned with your numbers and a support team.
Yeah, and there's plenty of mortgage calculators out there, but you do want to have some sense that it's an accurate, portrayal of what's going to be of your situation. So having a mortgage calculator that has been set up for you based on your ability to get the loan and your parameters, your numbers, it's at your fingertips.
It's almost not calling it a calculator is almost a disservice to it because it's really your personal app that's telling you your finances to buy a house, right?
It's kind of like sitting there and be like, how about if it's this number? And he goes, okay, it's this. And you're like, well, what if it's this number? And he goes, okay, it's this. Well, what if it's this number, Mike? Okay, it's like having a mic on your phone.
It's what I do manually all the time, which is, hey, Mike, we're looking at this home. Does it work? And I would put the numbers together and I would make sure it works and I'd send them information so they can review it. Here's what it's going to be for payment. Here's what it's going to be for cash at these price points.
And you know what? The other thing I'm learning is we've had that now about year and a half, 2 years.
Yeah, I don't even remember.
But the thing that I've noticed now that we're talking about this just popped into my head. How many of the customers understand the mortgage process much better because they're plugging in the numbers into their app and they're seeing the changes?
Jimmy used it.
Yep, right. Him. I used it constantly. I wore it out.
You almost broke it.
I got mad at me. Yeah, no, I did. I constantly did it, and obviously you're calculating the three big things: the house price, taxes, and homeowners insurance.
And it'll do HOA. You didn't have one, but it also do HOA or condo fees.
It's perfect for like Timothy and Carlwood. They were really, they were not because they had to be, but they were like, we need to know what these numbers are going to be to the point where what's our taxes going to be next year? We had portability. So they're just very in tune with the budget part of it. They knew where they wanted to be. They knew what was comfortable. I think you guys came in below your comfort level. Right, or
below what we qualified for.
No, well below what you qualified for. But so it just, it helps. And
we did because of the app. I mean, we knew our numbers.
So what we're going to do on the flip side is we're going to talk about all those moron buyers that bought last year, a year ago, and how bad they did in the real estate market. That's what we're going to talk about in the next segment.
Dummies. All right.
Sunshine.
We'll highlight all the dum-dums. FloridaTalkRealEstate.com. Know, use it, love to share. You have a team of pros. These are experts in their field, and if you listen to the show long enough, they actually belong, or well together, are friends, but they all really share the same kind of desire, and that's not only to excel at what they do, but take care of you, earn your trust in business, the referral for the future. It's about taking care of the community, making sure everything goes well. Look, the deal might not get done today. Maybe it will next month, next year, 2 years from now. We build a relationship. We'll take care of you now in the future. And then you just keep referring, and that's how that works. That's why we've been doing this almost 12 years here. FloridaTalkRealEstate.com. You can experience it all on Facebook and YouTube as well. And of course, you can always be a part of the radio show. If you want to dial in, 877-927-6969. If not, I understand. Go to FloridaTalkRealEstate.com. We're back in 4 minutes right now. It's Florida Talk Real Estate right here on the radio.
You're listening to Real Radio, available everywhere you want to listen.
Thanks.
Yeah, even there.
Got Cam's in town. I got to shoot videos today.
Cam's in town. You put
Yeah.
those flash screens in, or do you?
I'm what?
Hey, it's your boy Johnny
Oh,
C here,
I
host of
forgot.
Florida Talk Real Estate. They're
I'm
tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-78. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
I love it.
Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-3. Real Radio 92.1 is WCR West Palm Beach, an iHeartRadio station.
Listen on your iHeartRadio podcasts. We never sounded so good.
That's one of those games that I can be like, oh, I can learn this quick and just sit there and just ride somebody, you know. Yeah, he's bowling. Somebody's on a heater. Either way, for them or against them, right? Yeah.
This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, that's it. 877-927-6969. It's toll free if you'd like to be on the radio, part of the program on a Saturday. We got another hour for you. 2 hours of infotainment is what we offer every Saturday. Thanks for being with us on the old radio or maybe live streaming with us on Facebook, YouTube, Florida Talk Real Estate. You find us both live streaming on a Saturday. Always remember FloridaTalkRealEstate.com as well. Timothy, my producer extraordinaire, my brother from another mother. How you be?
I be just fine. Happy Saturday, gentlemen.
Happy Saturday.
It's a big ass sports weekend. The locker room gonna be live, yeah.
We'll be live. We got 4-hour show coming up following right here with this show.
Beautiful.
Right here, 92.1, 101.7, and of course the iHeartRadio app.
Excellent. We'll all be listening for sure.
A lot of college games this week.
Is
I'm
it?
a big time. I got a couple wagers here as well. Maybe I might have a little interest.
Someone's got an app over there. Huh?
Yes, I
There's
do.
an app for that. Very cool. We definitely will be listening. And obviously, locker room will get on an hour from now, like it is every Saturday. I'm your boy Johnny C. Mike Rauch is the mortgage guy from the mortgage firm, and he's right here to my left. You're right. Hello, everybody.
Is it there, right?
It is.
Okay. Yeah. All right. Good morning, everyone. looking to my left. Hello.
Right.
Okay.
Jimmy D's here.
I'll say, no, go ahead. I wanted to say,
Jimmy D's here. Jim Paola, your resident top producer, Keller Williams team, Florida Home Pros, Keller Williams Innovations. What are you going to say?
the guy that steps on everybody all the time, every year consistently for 11 years, 47 weeks.
That's it.
Sorry, Johnny, you've taken it every week. I appreciate that. I got to bring this up since you're talking about your left eye, right? How come when I'm watching videos sometimes on my phone or whatever, I see that the driver's
The words are backwards.
yeah, the driver's side is on the wrong, the steer wheel's on the wrong side of the car.
I think it's a setting.
And then-
You can mirror
then,
the video.
But I know they're in the United States, and I'm like, what's going on with that? So I know there's a mirror thing because I should use it for a StreamYard or something. But
If you saw yourself driving in the mirror, what would it look like?
I guess that's what it looks like. I get very freaked out about that, though. It's freaking me out.
Yeah.
So anyway, I
Like
get
when you're in the
very
mirror,
confused about
Jim, if you raise your right hand, what
Yeah,
is
but
the
why-
doppelganger your Jim's hand? Which hand is it raising?
that. Yeah, but why wouldn't never mind. I don't understand why they don't just fix it like ours right now. If you look at our thing on Facebook or YouTube and you see Johnny's background, you could read the 92.1 and it doesn't look flipped around. It looks regular.
Huh. Because it's not
So-
mirrored.
Yeah, because it's on the mirror.
Raise your right hand, John. Yeah, it says right hand. But if he was mirrored, it would look like he's raising his left hand.
Well,
Is that the official term for it in the video setting?
mirror? Yeah,
Mirror.
actually, mirror is the setting. Yeah, and that's what we have on the StreamYard right now. But anyway, it always gets me freaked out when I see that.
Let
It's
me
like,
see if I can change mine.
You go mirror?
If I don't know if it's an option in this.
well, you're taking away time from
There
good
you go.
news for Mike. There you go. Did it change anything?
I don't
think it
know.
changed anything.
Does it look the same?
Yeah, it looks the same. It looks the same.
So I'm going to raise my right hand.
That looks the same as before.
Do you solemnly swear?
Which hand is this, Jim?
I could tell that's your right hand.
What?
Because I understand it, but when somebody's driving and they have it on the other side,
How can you tell that's my right hand?
because what do you mean? How can I tell? I'm looking at the screen.
It's on his left side.
Huh?
What?
Okay.
Look, yeah. If you're watching this on Facebook, right? Look at the video. Which hand am I raising?
I know that you're right hand because I'm having in my head that you're.
No, but in the video, what does it look like?
Oh, that's the left side of the screen, but that's your right hand.
His brain's fixing it.
It's the left side of your screen, but it's your right hand.
This on my body, the image you're looking at. This looks like my
That-
right hand.
Yes.
On the screen,
Which
it's
shoulder? Which
the
shoulder?
left side of the screen
Which
is
shoulder
the
am
right,
I pointing to?
the right shoulder.
Are you looking at it?
I'm looking at it right now. Yeah.
Oh, it's mirrored for me though. Why isn't it mirrored for you guys?
Oh, it's just for you.
No, like my
That's
video. Go ahead, mirror your image, Jim. Just so you see what I'm talking about. So go to
I
settings.
don't want to. I don't want to
everybody
do
do
it.
this.
I don't want to screw up the.
You're not gonna just go
on
to
the board.
settings.
No. Let's talk about interest rates and stuff. Let's switch.
So now I'm switching it.
Look at that. It doesn't do it on everybody else.
It does. It just switches it for me. That's so crazy.
Yeah.
So
What's the point?
thank
of
you, Mike. Thank you, Mike, for making me sound like I'm the crazy one.
that? Yeah, I'm sorry. I can't see your video, but when Jim brought it up, I can see.
I am the crazy one.
Oh,
but
yes.
I just say thank you for pointing it out.
Why would you have a mirror feature that only mirrors it for your view and not for anybody else?
I don't know what the purpose of
But anyway,
it is.
that's your explanation. It's
Yes.
mirrored.
So we were talking about interest rates, and we've seen a 0.5 point drop over the last 5 weeks, which is a really good respite. We were approaching 8%. Now we're closer to 7%. We're at 7.22. Wanted to ask you, Mike, about down payment assistance. Can you just kind of give us an update? I know you use it all the time, and you're checking on it.
Yeah.
Like how much money was left?
I
on
think I
that
saw
one
yesterday
program?
it was something like 17.
Okay, so it's slowed down a lot.
We're not doing like the 10 million a week. It's definitely been slower than that, but there's still, I think, they continue to have fallout, meaning funds come back into the pool because loans that were reserved. So when a loan gets reserved, those funds for that borrower, that loan, get pulled out of the pool of funds, right? When that loan, if it doesn't close and eventually cancels, that reservation cancels, those funds go back into the pool.
I wonder if insurance companies can come up with a plan like that. You get the money and then you save the money
But you
so that
reserve it.
you reserve the
spend
money
it.
so that you have it in case there's an emergency.
It'll never work.
Nah, that'll never work.
Well, you have to use that money to make money elsewhere in your portfolio.
Yeah.
You have to
Right.
say you borrow from Peter. And
we used to see about 10 million a week being used from the Hometown Heroes program.
Rolled it out. Yeah, like there was a big push when they first came out. When they opened up the program to all first-time home buyers, right? So Florida residents, so you live and work in Florida, and you haven't owned a primary home in the last 3 years, and you meet credit requirements and income, you're under certain income thresholds, which are pretty healthy, right? You qualify for this company.
Yeah, it isn't like you have to be destitute or something in order to get these loans. These are, definitely,
they're made for the masses, right?
Yeah,
So
they're made for the workers. They're made for people that are fully employed and ready to.
And it's been great, right? Like, and I think the mortgage firm still is the number one lender in Florida who's
awesome.
utilizing the program in the state of Florida. So that's pretty cool. And so they funded it for $100 million. Past I think it was June or July, rolled out 30 million like first week and a half used up reserve, right? And then it was about 10 million a week. Mm-hmm. So it was only funded for a year. So it just was like it was big like excitement. If you were ready, if you were poised, if you were in the game, right? You were able to take advantage of it. And then we kind of like it was 8 weeks into the program and the funds were basically gone.
And then they put in another 30.
Well,
and then
so then there was a month, several months where there was no additional funding, but the funds that would fall out would come available every other Tuesday. And if you were the Sharp LO watching, you could still get people.
Loan officer.
Yeah, loan originator.
Sorry, originator.
Yeah, they changed it from loan officer to loan originator. Fancy word for the sales side of things, I guess. Right. But if you were savvy, you could still get it. And then they came out, they refunded another 36 million.
Right.
36 million.
And then that went about 10 a week.
And it was on that track, but it's lasted. So half of it, I think that was probably 3 weeks ago, 4 weeks ago they came out with that. So
I thought they burned another 30 and then now we're on a new.
No. This is still
still part of that.
Fund. And so I have my sense is that the funds will be available for most of the rest of the fiscal year.
That is
and
really.
We should get a reboost. I don't know.
A bigger boost.
It's meant to be another 100 million, I think, in some summertime.
You got to take advantage of this program. A lot of people used it to great benefit. The program is where you could get up to 5% of the purchase price back for closing costs. Loan amount. Thank you. Loan amount for closing costs, prepaids, and down payment.
Closing, all the cash required on the buy side, unless you're paying down debt to qualify, so you can't use it for that. But
a lot of our customers are getting between $10,000 and $17,000 roughly is what they've been getting. You could go all the way up to 35, but Mike says that's unlikely. You don't want to get into the grass about that, but the bottom line is the income requirements, and then what you would need to buy to get a $35,000.
Yeah, you basically your purchase price, your loan amount would be like $740,000.
Yeah,
and so when you're getting a $740,000 loan,
your income's too high.
Probably have to make too much money to be able to qualify for that payment.
Yeah. So, so you got to take advantage of that program. It really helps you out with some of the insurance, right? It'll really help you out because the insurance outlay is much higher for prepaids now.
Yeah,
this can help with that.
I read an article this week too that was, I know the devil's always in the details, but I think it was a PTV article Urban Housing Authority, I think, is going to be given $100,000.
Oh yeah, the reason why I didn't bring that up, Johnny, I guess I should bring it up. But the reason I read that article, thank you.
You do have to be like one of the first roll. Like
Yeah, there's only 100 families that are going to, in all of Palm Beach County, only 100 families. So, God bless the 100 families that are going to get that program.
Yeah,
I mean, there's always been what's called the SHIP program, so State Housing
Initiative
Partnership, and those are county specific, sometimes even city specific, and those are up to $100,000. Which, I mean, can you imagine that? Like you're buying a house, you get $100,000 to put into it.
Changes worlds for people.
Absolutely.
Yes.
But the funds are always very limited. And so therefore the amount of people who can take advantage of it are limited. And they have these where it's kind of like first come, first serve, first come, first qualified, first serve. And so they know, like, okay, we're going to take the first 100 applications because the funds are going to be gone somewhere within those. Not all those first 100 are going to be approved or whatever, but somewhere within that first 100, all the funds are going to be gone.
Yep.
And people are lined up out the doors for these things. Yeah, and they're like, the requirements are pretty. It's not requirements. The amount of organization that one needs in order to be successful applying for those funds is good. So it's nice to have professional help, but a lot of these people don't, and so they kind of get in there. And
the programs are so complicated to fill out the information.
Yeah. I mean, it's like a loan application, but also
it's like much more detailed.
It's the worst. If I gave you a list of things I needed for underwriting, Johnny, like in my normal world, you would be annoyed, but I'll say, listen, we put everybody through it. No, don't take it personal, right?
Somebody,
it's probably like 3 times the amount of stuff that you need. And I'm thinking in my world, it's like this kind of like shows why these county government, right? In general, like they just need way too much. For what the purpose, if the purpose is assessing risk or assessing qualification, like they just need way too much.
I agree with that, but they are getting $100,000. Right? If you think about it that way, the government is giving them $100,000. So they want to make sure that the people they put in there are going to be successful.
Yeah, but the whole point is like, so if you're assessing risk on a much more stringent level that say Fannie and Freddie or FHA require for assessing risk, and they're like the real experts, right? Like they have national, they just got big numbers. They know what the risk is. So it's in excess, but if you, Donnie, were applying and you were sitting down with me, and I don't specialize in these, but I've done them enough. I know I could help you put everything together and make it as painless as possible. So if you're interested in doing that stuff, I'm happy to talk to people about it. You do need to be like really prepared because you have to get in like, okay, we're opening up the doors at 8 a.m. on this day. Okay, well, you better be there in front of the computer, ready to upload and fill out.
There is a date range too. They're going to open it and close it in like just a couple of weeks. And it's only 100 spots.
What I've experienced is the people that have really dogged it, they usually don't get in on the first cycle. What normally happens is the first cycle gets them qualified. It takes them a while to do it. They don't get in that first pool because by the time they figure everything out, its money's been used.
Yeah.
And then they're ready for the next cycle. So that they're almost ready for the next group. Now, the thing is, SHIP, when they run out of the money, it isn't like it's automatically replenished. There's only a period of time, and then you have to wait for the next cycle.
Yeah.
So it is a little complicated, but if it's what you need to do, it's really important. One thing, I haven't used SHIP in a long time. I don't remember if there's a location requirement of where you can move to. Before, there used to be, when you used the Housing Initiative Partnership Program, they told you where you could live.
I think, like, so for example, Palm Beach County, you have to buy in unincorporated Palm Beach County. So
that's true.
If there's certain areas where you won't be able to use the fund, but it's not as restrictive as like, hey, you need to buy in these underserved communities, right? There are some programs out there where you're having to purchase in communities that are underserved, and the reason is because they want them to. You want to start getting
gentrifying. I hate that word, but you know what I mean. Yeah, but and trying to revive the neighborhood, if you will. But I've covered those. Back in the day when I was a reporter, I covered those programs. The feel good stories of the person moving into the house, right? So a lot of the times those programs, a lot of times they would be police officers, firefighters, things like that got the program, right?
I mean, they had the good neighbor. FHA still has a good neighbor next door program. It's what it's called, and you get it for $1.
Yeah, but
It's like $100.
a lot of the people that got into those houses, now this is 25 years ago, okay, so I don't know if it's changed now, but a lot of the people that end up going into those neighborhoods, they end up moving out of those neighborhoods in a couple of years because they weren't satisfied. They felt the neighborhood wasn't safe enough for them for the discount they were getting, and they were trying to get out of the house as quickly as they could, but they were like, okay, I'm done, let's move on to the next thing.
Or the house appreciated. They're ready to take the next step.
Yeah, that's true.
Oh, that's another thing to talk about with these down payment assistance. And so even though it's money now, you okay to talk?
No, yeah, please.
So money, it helps you get your foot in the door. Now it does stay attached to the home, right? So it's 0%. There's no interest. There's no payment, but they are repayable under 2 conditions, John. Condition 1 is you pay off your loan early. Condition 2 is you move out of the home, but then retain it as an investment property. So condition 1, you pay off the loan early. How does that happen? Very common, sell the home, right? Okay, the money's going to have to go back. So you're not coming out of pocket
or
refi. So that's number one. I was going to get there. Yeah. Oh, what else?
I screwed up. Yeah.
Right. So you sell the home. Yeah, that's going to pay off your loan early. It's repayable. You're not coming out of pocket, but it's proceeds you don't get. Right. If you got $15,000, then if you're going to make $100,000 on the sale, you're only going to get $85,000. When you refinance, which is probably the most common scenario that people should be thinking about, Jim mentioned earlier, like with rates where they're at, what are the chances you're refinancing your home in the next couple of years? I don't know what the chances are, but there's a chance. And if you told me in the next 10 years, I would say there's a very high likelihood that you'll have an opportunity. Market conditions will be favorable for refi. So to be repaid then, again, you're not coming out of pocket. It's just equity position you don't have. If you win the lotto, let's say, or you get very successful, Johnny, that idea you've been thinking about, it hits, right? All right. So you're like, I want to get rid of my mortgage. Okay, well, if you do that, you're going to pay it back, right? So that's the circumstances where that money is repayable because you're terminating the loan for its 30-year term. Now, the one thing I don't know for sure, like let's say you're on a payment acceleration, right? You're paying every 2 weeks, and you're going to shorten your term from 30 years to 23. I think if you pay it off naturally like that, like you just not one big thing. I think that I don't know. I don't know the answer to that one.
Oh, because you're going to be paying off for 23 years instead of 30.
Right. The article is specifically from the Urban Housing Authority for the 100K in Palm Beach County. You had to have it for 30 years.
It might be the case. Yeah. It might be the case. So even if you pay it off at 29 years and 11 months, right? So just be careful, guys. But the other one, which will kind of come back, and this is the one where you have to come out of pocket, is if let's say you buy your next home, you're going to retain this home and rent it out. So you're going to keep it, turn it into investment property, you're going to start making rent. That's, if it's no longer your primary residence, that money is repayable. So that's the one where you need to be prepared to say, wait a second, I need to have that $15,000 in my pocket, ready to rent. Now, I don't know how they monitor it. I'm still not sure if they're like doing affidavits every year, or they're just like, maybe they're connected with the property appraiser, homestead exemption, something like that. I don't exactly know how they monitor it, but that's the thing. But for most people, I would say none of those would stop me from wanting to use it, right? Sure. None of that would stop me from using it to get into my first home.
Of course.
Because that cash, when you're buying your first home, Johnny, that cash is important. The money that that $15,000 could be much better served in your bank account than as equity position in the home.
Absolutely.
Right? Because moving expenses, nest egg, emergency fund, like all of this stuff when you're becoming a homeowner, it's just important to have some money
to use someone else's money, right?
Oh, sure.
Yeah.
OPM. At 0% interest with zero payment?
Yes.
Yeah.
Please
take it.
Other people's money.
Yeah, you got to take advantage of that program. Mike specializes in down payment assistance. You got to give us a call and get to Mike. 888-973-7828 or FloridaTalkRealEstate.com. I wanted to go over the market and talk about all those stupid buyers last year that had those high interest rates at 7% or higher a year ago today, and they bought the house. Those stupid buyers.
Well, a year ago today, to be fair, Jim, I looked at this on the chart. So a year ago today, we're up So Fannie's at 7.22 this week.
I'm sorry. You're talking mortgage rates.
Yeah.
Okay, go ahead.
7.22 this week. A year ago, this week it was 0.73 less, so about 6.5.
Right, but back then, a year ago, when we talked to all the buyers, how many buyers said,
"Crazy,
I'm going to wait. I want to wait. It's prices are too high, interest rates too high." Right. Interest rates were 0.73 lower last year this month, right?
Yeah.
So what happened in the last year? Median sales price, Palm Beach County, October 2023, $622,733. That's the median sales price for a single-family home in Palm Beach County as of last month. What does that mean? Half the houses sold for more, half the houses sold for less. But that is the second highest recorded, actually third highest recorded price. Take it back. Second highest recorded price ever in the history of following this for the state of Florida for median sales price. The highest was $625.
This is a crazy number.
The median sales price today is $622,733. The highest ever was $625. We hit $625 last year, and we hit $625 the year before. Never got higher than that. Then we dropped down all the way into the 560s, and we climbed back up to in this year, and we climbed up to 622 at the end of the year. So, if you bought a house at 0.73% lower than today's interest rate, and you bought the median home, and now your median at the median sales price back a year ago, you would have paid $570,000 for the median home at 0.73% lower interest rate. Okay, which means your house is appreciated. This is talking about everybody. I'm not talking about everybody's specific home, but in general, single-family home prices have risen 9.3% this year, year over year. Okay, St. Lucie County 4.9%, Broward County 7%. Dade County has an increase.
St. Lucie just kind of like on a normal appreciation type year. Everybody else is still like
St. Lucie actually was a little disappointed because Port St. Lucie's always got the crazy rates. But the reason why I think is that, well, actually, there's two things happening here. First of all, I'm very surprised that we hit 622 for Palm Beach County again, right? We're almost at the peak of the peak of the peak, and we have the highest interest rates we've had since the year 2000 or something.
Well, and you're a very active agent.
I'm in 4 counties right now.
Yeah. Well, and number 38 out of 6,000 plus in the South for Keller Williams.
Yeah.
So very active. You're in a lot of deals. You see a lot of deals, and you're surprised by that number. So that's
I really am. So we're getting to the peak of the peak of the peak, and we had the highest interest rates ever. So if you're one of those buyers that have been saying now for a couple of years, or even 1 year, I'm going to wait till things get better. Well, what are you waiting for? Because, and I hate to say it this way, and I'm not saying you should just go run out and buy a house if you want to buy a house, if you don't need to buy a house. But if you're really thinking about buying a house, and you're really serious about buying a house, and you're jonesing that you're paying tons of money to your landlord, and you just want to get your own place and get your piece of Americana, and you keep worrying about these outside things, it isn't getting any better for you. And there's nothing looking forward. Once again, guess how many short sales and foreclosures? We had 1,000 home sales last month in Palm Beach County. About 980 in Broward, about 1,000 in Dade. St. Lucie only had like 500 because there's smaller situation there. But what do you think for foreclosures and short sales? How many we had closed last month?
Palm County?
Yeah.
Last month?
Yeah, last month. A single family home.
Yeah, 4 of them.
I was going to say single digits. Yeah. We haven't.
Yeah,
not
exactly. So we had 1,000. We had 1,000 and I'm sorry, we had 1,000 homes sold this month in Palm Beach County. 4 of them were foreclosures, 0 were short sales out of 1,000, right? So where's the market crashing, right?
Well, you can't have a short sale. Very hard to have a short sale if you're not upside down. That's difficult.
Yeah, I think I did one once.
That wasn't upside down.
Yeah, because the
IRS
closing costs pushed them over.
Yeah.
Right. So those are easy ones. The bank are like, yeah, we'll take care of that one. See you later.
Well, like you said, what do you wait for? Mike says it all the time. Like, you have to have your target set.
You gotta have
Whatever
a
it
plan.
is. Yes.
Instead of just saying, I'm going to wait, like what you guys have been saying, wait for what? Have a plan. And we're not saying wait for what, like being sarcastic.
No.
Like, what are you waiting for? We're saying, what are you waiting for? Real questions.
That's
Great,
right.
Johnny. What are you waiting for?
Right.
What is your target that we need to do?
No, but if your answer is I'm waiting for the market to get better, then we could look at you kind of sideways and say, well, okay. So you're not really waiting.
So
you don't really have no idea what you're waiting for.
If you have a serious buyer and they're serious, what they're going to say is, I'm not sure I can afford the mortgage payment.
Yeah.
Because that's what they're really saying when they're saying they're worried about the market getting better. Either they're worried they don't have enough money to put down or they can't afford the payment, but they don't know and they're afraid to find out because they just quote think unquote that it's bad.
Yeah, I would even love it if you told me, like, Jim, I think a good target. I need the median sales price in Palm Beach County to be $500,000 before I'm buying.
Mm-hmm.
Okay, good. So you got a target. Watch it.
Yeah, so you have something.
Now, if you tell me I need it to be $300,000, I'll say, well, when was the last time that was the case?
Right.
Which I'm sure has happened in the last. It was probably 2013, 2014.
For 300,000?
Maybe even after.
I don't think so. I'm not sure. Maybe.
2012 would have been the very last, like, bottom.
We got it right at the bottom.
What do you call the
trough
bottom of the valley of the
trough.
bottom of the valley? You said the peak of the peak of the peaks. I'm trying to figure out something similar.
The Mariana Trench.
Right.
The Mariana Trench.
I know where we were at in Palm Beach County in 2014 when we closed. So I would say, median was probably around 3.
Wow.
Maybe a little
Really?
higher.
Wow.
Maybe a little.
Yeah, I guess.
So if you're waiting for that, then it's like, well, I don't know when that's happening, but that's fine. That's a target too. But I'm a realistic target.
I'm actually going to come out with a video this coming week where I'm going to be talking about, are you looking for a unicorn? Because there are buyers out there that want to buy, have things kind of lined up, but their big problem is, let's say they know their numbers, but then they're looking for something that doesn't match the numbers that they have. So something's got to give, but they don't know any better. It isn't that sometimes they're just being unrealistic, but sometimes they just don't know better. And they don't know they're looking for a unicorn. And it's really important to have somebody to sit down and tell you, you're not going to get, I'll never forget, I had a guy call from the show, really nice guy, would have loved to work with. Yeah, I want my son, I'm going to want to buy a condo for my son. I want a 2-2, got to be on the Intercoastal in Delray. I want to see the water in the back porch, the screen patio.
Yeah.
I want to see that. And I'm willing to pay $200,000. And I'm like, that's not going to happen. I can't even get you $200,000 at Military Trail.
Did he say Delray?
Yeah, he wanted to be specifically Delray. And I said, I can get you a really nice townhome on Military and Linton. There are really nice townhomes out there for $250. That's, less than 3 miles to the beach. No. And he goes, well, I'll take a 1-bedroom. And I'm like, I'm sorry, you're just not at the right price point. There will be nothing. And then I looked it up and there was nothing. And it wasn't even close. Right. That's a unicorn. You're looking for something that doesn't exist.
Yeah, right? or another, like, maybe a good example is I need a 4-2 with a 2-car garage, single family home with a pool in Palm Beach County, but I can only, my budget's $2,700 a month. Yeah. Right, which is going to probably put you at the $350 right now in today's market with rates, like $350 price point, right?
So you're getting if you want a 4-bedroom at $350, I don't know if you get the pool, but the 4-2 at $350, you're probably looking at 1,100 square foot home with 4 bedrooms, right? Which is tiny, right? But so that would be very, very difficult to find. Like that would work.
And people can get out there and get discouraged, but it's better to be intelligently discouraged, I guess. When I say intelligent, like you have information, right? So you and it's okay. Like this is the people we want to get set up so that they know there will be a rubber meets the road moment when it comes to price point and payment and the type of house that you want. Like you have to be able to know that stuff and don't get discouraged. Just know, like, okay, this is where I'm at. I either need to adjust or I got to wait
Where are you gonna be?
Yeah.
So all those stupid buyers last year that I talked about at the beginning, at the flip side, all those stupid buyers, the morons, right, that bought the houses last year, they just appreciated somewhere between, on average, between 5 and 10%. So all those people sitting on the sidelines,
yeah,
you don't get it, and you think you're being intelligent about it if you could afford it and want it and haven't done the research. That's the people I'm talking about. If you can't afford it right now, you can't afford it. If it isn't the right time for you to buy a house, don't buy the house.
Sure.
But if you can and you want to and you're not doing the right research, it's probably a half hour to get vetted between me and Mike and get you going. It's like a half hour of conversations on the phone without even meeting anybody to get things going.
And then maybe a couple days of document review type, just depending on how quickly. Usually the long pole in the tent is like you getting me your documents.
Right.
How long is it going to take?
How quickly can you get this done? Right.
Yeah. So it's really important. But let's continue looking at the market because there's some really interesting stuff happening here. Here's one of the downsides. So we had the second highest median sales price ever in Palm Beach County, 622. The highest ever was 625. So basically we're there. Okay, we're there again, right? Well, we went down. We got to 625 last year, right before November. Then it started going down because the interest rates. And now everybody's kind of settled in that these are the interest rates, and now the prices are going back up again. They're not going to be slowing down anytime soon based on the statistics. But here's one thing that is a weak spot, a couple of weak spots actually. Closed sales. In Palm Beach County, we only had 1,086 single-family home sales in Palm Beach County last month. Just to put that in perspective, in 2021, which is our strongest year for sales probably ever in Florida or in Palm Beach County, 9 of the 12 months, we were doing 1,500 sales a month or more. And we're only at 1,086 right now.
What was the inventory?
The inventory in 2021.
No. With the 1,000 sales.
Oh, that's what I'm going to get to next. The inventory is slightly increasing a little bit. We are now at 3.5 months of inventory. So we are slowly, we were at like 2.8 last, we were at 3.2 last month and under 3 the month before that. Inventory is growing, but here's why. It isn't that we're getting a lot more new properties on the market. It's taking longer for the properties we have on the market to sell because we have less buyers, less sales, right? So
you're still getting like a new. Do you have new listings there? Like new actives?
Oh yeah. So the pendants aren't the pendants. The pendants
same
are
amount of new actives.
Here's that part.
And more that are staying.
Add on.
Yeah.
The pending inventory is down 4% compared to last year. Now 4% sounds like a lot, but it's only 66 homes different, right, from last year. So it isn't like a tremendous amount, but we're not increasing. So we're not seeing the buyers flooding the market, which we know. The national statistics, Mike, is that, I actually read that we have the lowest mortgage application activity ever recorded since they started recording that stuff. It's the lowest ever.
Florida phenomenon?
No, national. That's a national statistic. Less applications ever recorded in the history of them recording how many applications weekly.
I wonder if that's a generational shift. I wonder if we're seeing like a certain. Yeah, it's just a matter of economics. Yeah,
I'll tell you what. If we didn't have the down payment assistance, what they did with Hometown Heroes,
we probably at 6. Well, maybe not that low.
Maybe we'd be like with their own national, right? Which is I think that has actually been a boon for Florida's homeownership, economy.
Agreed.
The second half of this year. Because I'm just trying to think like numbers wise, like what percentage am I looking at with DPA versus not? But I don't know what it is. But
now,
it's a good number.
But when there's so much skin in the game from like state funds, right?
Sure.
You're like it's a weird copy of our housing economy.
It has made an impact.
It has. It definitely has.
Yeah, and
so all the homeowners should be pretty thrilled about it.
I always feel like Florida also is way more real estate conscious than a lot of other states. I might be wrong about that, but it seems like it's always in our DNA down here about
Very
property
socialist.
values and everything. I'm sorry, what?
Very socialist of us.
Well, why do you say that? What
It's
do you
just,
mean by that?
it's very. I
No,
like
it's
the idea.
capitalist. You get the property taxes. We don't have state income tax. So where's all our funding come from? From property taxes.
I like where your mind works. I really do.
So, and another thing that's showing that the market isn't really being very strong is the new listings. Now, normally this would be a great thing, but right now our new listings have increased by 11%. That's huge. We haven't had an 11% increase in listings in I don't know how long. Okay. Now that only means that we have 1,700 new listings this month compared to 1,500 new listings a year ago. So it's only 200, but that's still 200 more. And I'm telling you, I'm picking up a lot of listings right now. I have 9 listings coming on the market soon.
Awesome.
All different types of price points, all different reasons why people are selling. That's what I love about being in 6 counties. I drove 350 miles 3 days ago. My foot hurts from being on the gas pedal so much.
Oh,
I know, it's so crazy.
no cruise control in your car?
It was traffic was horrible the whole time. But the bottom line is, I love cruise control. But the bottom line is that I get to see a flavor of everything because I don't just specialize in one type of market, and that's what I like about it because it's different. But a lot of people are moving for a lot of different reasons right now, and it's very fascinating. So this new listing is what I'm reflecting to is a lot more people seem interested in selling, but I'm not seeing that many buyers yet. We're not getting a lot of buyers. So this is going to be where we might be at the fulcrum point or pivot point. Did I say fulcrum?
Where we actually shift more towards a neutral market?
Yeah, where we get to more of a neutral market, which I would be going, yay.
Sure.
Because I would love it to be even, Stephen, just for a year. Give me a breather so that everybody's on an equal playing field and everybody can be reasonable. I don't want it to slide into a super strong buyer's market either. I would just like to have a normal market, right? The buyers don't have to have a tit for tat. We don't got to have a super buyer's market. If we have a super buyer's market,
We need to claw back.
our economy is in big trouble.
We hit buyer's market.
We're in
and
trouble.
I hate to say this because I would like to be buying in the future. Yeah, that's exactly right. And all the homeowners are going to be like, oh, no.
Right. Nobody's
What the
going to
hell?
want the buyer's market everybody's asking for.
No.
Nobody really wants it. They want a stable market. That's what you guys want. And let me tell you right now, this market's been, it hasn't been blockbusters, but it's been pretty consistent as far as pricing, despite interest rates. So we're still in the law of defying gravity. What goes up must go up.
Yeah,
Still, nothing comes down, right? Interest rates go up, prices go up. I would have never thought that I would see that because it always makes sense. Prices go up on something, less people buy it.
Well,
Right.
it just shows the markers that you should be watching are not that. Markers are
Unemployment, inventory and unemployment.
Yeah.
Those are the 2 things that I'm looking at all the time to see. We haven't seen anything big changes on that other than the inventory, 11% increase in inventory, while it's only 200 homes in one county. Okay, I mean, we're not talking about and that's still, we haven't seen that in a very long time. So we'll see if this is going to be the pivot point or it's just another little blip.
Yeah, a little
Well,
bit.
and again, there's always so much of the devil in the detail. Like what is driving these people? Is it like you say? You got a lot of different reasons. If the predominant driving reason is I have so much upkeep in my home investment that I have to make in order to stay here because my insurance is going to pop. Like if that's what's driving them, that's a weird position because I think a lot of homeowners have kicked that maintenance can for a long time.
Oh yeah, yes.
And I think a lot are starting to get to where there's a worrisome. It maybe got a little chunk left here, a little chunk there, a roof, some big items, but I think all the way down to painting.
So
When was the last time you painted your house? Wow, I painted my house in 15 years. Like
I just painted. I'm on a paint program in my.
nice.
I hate painting, but I found that if I put it into chunks, like here we're going to do this room, or we're going to do this. I've done 2 rooms so far in the house, and if I manage it like that, then it's not so painful.
Did you do the bedrooms? Is that what you started with?
Did 1 bedroom.
Yep.
and then I just did the kitchen dining room area.
Oh, okay.
And then so it's funny, Tiffany, like when are you doing that? Well, I got to get like in a mental zone.
Yeah,
it's not just those slap some paint on. No, it's like talking. You prep the walls, you clean the walls,
You got to cut,
recaulk everything. Like we're talking about spackle and sanding and then painting.
Do you tape? Do you tape? You tape it?
Yeah, I tape because I like.
Do you just do tape, or do you do the tape with the paper with the little?
No paper.
No paper, just the tape.
Yeah. So anyway,
it's a lot. It's a lot, but I think a lot. Look, we're not talking about all. Mike lays it out. Right? I got to stay on top of this. I am not one that does that very well, maybe I'm coming from a place, but I also know a bunch of homeowners, and I see their homes, and I'm like, we're all kind of in the same boat.
I'm on like 10 years to my house, Johnny. So this is the first time I'm doing it.
I'll be 10 years next year.
Yeah.
Well, Johnny's done upgrades throughout the time. He has, and then the car helped.
Yes.
I'm talking about the car that drove through Johnny's house or hit Johnny's house.
Drive through your yard.
I just can't believe it didn't get into your pool.
Thankfully,
Thank
we
God.
just resurfaced that pool. So.
Oh my God!
You know what's funny? I don't.
So again, upkeep.
I don't see that as being a motivator for selling. But Jim, you talk to sellers all the time. Why are people selling?
Okay, so a lot of things there's a lot of things that are happening right now. We're seeing a lot of people retiring and they're moving from Florida. I just had a guy call me this week, which was so nice. Ricky, hey Ricky. Ricky was my old high school buddy, and then we were college roommates, right? And now Ricky's.
Oh, you guys had a very close relationship.
right. So
in high school.
So
we lived together in college.
But I haven't talked to Ricky in a long time, and he's been a Broward County school teacher, and he just retired. Thank you for your service. And he is now thinking about moving from Weston to another part. He doesn't know where he wants to be. He was talking to me about Boynton and Stewart and Vero Beach, and then he mentioned Georgia. So I said,
he's gonna have to keep going north a little bit.
Yeah,
Vero and then Georgia.
And I said, hey, look, I understand why you love Georgia. I love Georgia too, but if you're going to do it, you might want to check out Eastern Tennessee first because of the income tax, no state income tax.
I can do both those states, by the way.
And he was, I know that. I got that.
Boom.
And how many states are you up to now?
6, I guess.
Oh my God! When you started with
Florida, Tennessee, South Carolina, Virginia, Colorado.
How come you haven't done North Carolina yet?
I think there's a rule something weird in North Carolina.
I think so because you would have
if you're not physically present.
Yeah.
Now the mortgage firm does have branches in North Carolina, but I don't know if there's some weird rule there.
So, so Ricky was saying that he wants to move. He isn't sure where. Right? He owns his house outright, so he's going to buy whatever he buys cash, and this is his retirement home, the home that he's going to be in the rest of his life. He hopes. So I said, hey, you should go look out at Tennessee. If you're going to look at Georgia and you don't have a specific place in Georgia, look at Tennessee too. You might save money in the long run.
Sure.
So he actually said, he called me up yesterday. He's like, I didn't get to take the call. He's like, hey, get me an agent at Chattanooga. We're going to go look at Chattanooga now, which is really nice. And that's the difference. Like, I haven't talked to him in probably 30 years, but he called, gave him some advice. I'm sure he did some research. He's like, hey, maybe we should be looking at Tennessee. So he gave me a call back to go help him find a top agent out there to see what will be over there. So that's one reason. So people are moving out of the state for affordability and lifestyle change. They don't like the congestion. They don't like the high costs here, and they want a slower pace.
Makes sense.
Baby boomers are going to be the biggest inventory increase for houses in the next coming cycle, because there's a lot of people at the baby boomer age that are getting rid of their second and third houses and decided this is the house I want to live in, and I'm getting rid of all the other stuff, or downsizing.
We're just picking their final home.
Yeah, like their homestead, if you would, their final homestead.
Sure.
And a lot of them are choosing that Florida isn't it. I think that, and I have no statistics to back this up other than anecdotally, but I think that we're going to be looking at this whole 10-year thing, this 10-year cycle that we're going through right now, in my opinion, as big changes of people jockeying for position. And I think that Florida is going to become, and I'm not saying this is a good thing or a bad thing, I'm just stating what I think. I think it's going to be way more expensive to live in Florida, and that the people that have been living here a long time should really appreciate how much they enjoy Florida, because it's going to get more and more expensive. And I think it's going to kind of get more like Manhattan and San Francisco, where it's going to be crazy town. And the working class and middle class people are going to be living in the center of the state mostly and servicing the outlets. So it's going to take a while for it to happen. It's going to be like switch.
If you think if that's your outlook, then it's all the more reason to become a homeowner as soon as possible.
That's
right?
true. Now, other people that are leaving, they're leaving this area to move to another part of Florida for a slower lifestyle. We're seeing that.
Yeah.
Okay.
New construction.
New construction is a big deal. You know what I'm really surprised about is how much new construction is going on in Martin County. That place didn't want any new people moving in at all, it seemed like, and now they have some decent action in new construction up there for a couple of years now. It isn't like just happened now, but it's nice to see that they're kind of opening up a little bit. Stewart, Ricky was looking at Stewart. Stewart's one of my favorite downtowns. I like Stewart. It feels like older Florida. I like that. And I like that it's so close to the water. You always feel like you're near the water over there.
Are they building up over there on the east side or on the west side? I did see on the west side of like Palm City, they built all that area up around where the turnpike is. And
I think
that
there's
area.
only one I know of east, Jimmy.
Okay.
But I'm not even sure if it's that east. So
I don't
not
know how
sure.
much land was open over there on the east side. I thought that was pretty well, kind of.
There's definitely pockets there, but with all the regulations of the zoning, everything is just so restricted about new construction. But they are opening up. So that's some of the reasons. And there are people that are moving because of homeowners insurance. That's actually happening in today's market.
Yeah, I can see that being another driving factor.
So the thing is that this market isn't going to be. If you're looking for the perfect market where it's just super clear, it's like, well, you should buy a house. We already had that market. They were at 2.65% interest rate. And January 7th, 2021, at 2.65 interest rate. And the people that didn't buy then, they were saying that the prices were too high.
And they were. And the for them.
Yeah.
Even at the low interest rates. And it was very hard,
super
competitive, people paying over ask,
Well, there was truth to that, but it was either go through that process or not get what you want. It's kind of like you're on a Disney ride and the line is 3 hours long, and you just decide, is it worth wait 3 hours for this ride, or do I not want to have the ride? Right?
3 hours.
That's what I'm trying to say. People a lot of time are probably not going to have the ride, right? They decide they don't want the ride. But the bottom line is, if somebody had done that in 2021 and stuck with the bare knuckle brawl and got their houses, like if they had a throw a couple
2.5% interest
and they got that too right, and they got all that, and now their houses were 20% more than it was, and they got a 2.65 interest rate. Don't tell me that those people made a mistake, because they did not.
No,
Okay,
they're sitting there in a comfortable. I'm sure they're in a comfortable financial situation.
They're looking like geniuses.
Yeah,
they're looking like geniuses. But a lot of the people that did that were at the price point where people were fighting, they had to be one of the tough ones that said, okay, if I lose 3 houses, I want my house. I'm just going to keep doing it until I get my house. And those are the ones that look like geniuses now. The other ones that gave up, now they're still saying, I'm waiting for the market to get better. The interest rates
they're
are
going to have to. Yeah. Then they're waiting for that median sales price.
Yeah. So if you're confused about this market, I don't blame you. One phone call will get you everything, right, Johnny?
Yeah, it will get you as a bunch of pros, people that are entrenched every day in this constantly changing market, whether it's the mortgage side, the insurance side, the actual real estate side, and everything in between. You got to have a team. You got to have pros. You got to have people that care and are very good at what they do. I can get that all to you in one spot. The one-stop real estate shop that is FloridaTalkRealEstate.com. On Facebook and YouTube. Remember, Florida Talk Real Estate as well. And there is a hotline. You like making an old school phone call? Dial it up 24 hours a day, 7 days a week, 888-973-7828. You can write that down or find it at FloridaTalkRealEstate.com. Access to the entire team. It's a beautiful thing. Know it, use it, love it, share it. You can change people's lives by just putting them on pros. FloridaTalkRealEstate.com. Jimothy, I know you're going to stick around to the locker room. We'll be listening, my brother. Hope you have a good rest of the weekend.
All right. Thank you very much, Johnny, Jim, Mike. Have a great weekend, guys.
Always a pleasure, my
Thank
friend.
you.
Mike Rauch, the mortgage guy from the mortgage firm. I hope you have a good weekend. Thanks for all the insight as always.
Well, thank you. Thank you, Johnny. Yeah, thanks everybody for listening.
Appreciate you. And Jimmy D, there's Jim DePolo with the Florida Home Pros team, Keller Williams Innovations. How many miles are you putting in this weekend?
I hope not. I hope nothing. But I know that's not happening, but I wish it was nothing.
Yeah, well, hey, I guess feast or famine will take feast all day.
Since April, I put 22,000 miles on my car. Since April.
Wow.
Yeah.
Amateur.
Yeah.
We're just wrapping up our lease, and I have 19,000 miles on it.
Wow. Wow.
Oh, and believe me, I'm going to be working those dudes over the cold too because they want to bad.
Do you know anybody who can roll back the speedometer for me?
Mike might be able to do
Tease it. Yeah, he might.
Never.
Hey, that guy with the car lift.
Locker room is next, and then Briggs and the bullpen show's coming in. Jimothy's going to make it happen as well. We'll be back next Saturday, 2 hours of infotainment every Saturday, leading into the locker room. It's Florida Talk Real Estate. It'll be 11 years and 48 weeks, I guess, next week. Closing in on 12 years. Great to have you with us. Enjoy the rest of your weekend. We'll see you next Saturday, Florida Talk Real Estate, right here on Real Radio.